Hey yo, hello and welcome to the channel. If you are new here, welcome. If you are not, welcome back. Today I'm going to be going over 2 days of price action from last week that I thought I can pretty much teach some important concepts on the way I trade and how I view the markets, and maybe you can implement it into your strategies and your discretion so you can end up taking banger trades. Just in hindsight, this is all in hindsight, and I didn't end up taking these two trades, but in the future, I'm going to be looking to incorporate these types of trades into my trading. So we're going to be going over the week, over the first 2 days of the week, and going over the two bangers. Okay, the two bangers that it was choppy price action, but you could have taken a beautiful, beautiful trade towards the draws on liquidity based on your discretion. Here we are. Okay, so let's go ahead and go look at this day right here. 9:30 a.m. open right here. Let's look at the daily chart. What happens on the daily chart? This is the opening of the week. So we come up and we sweep out the weekly, the previous week's high, and we end up rejecting in pre-market. So what does that mean? If we reject in pre-market, I assume that this is going to be the weekly high. Okay, this is going to be the weekly high of the week. It's going to be the weekly high of the week, and that you are not going to see price action go above this weekly high. And the way we understand that is because we swept it, we rejected, we came down, and now we are looking to pretty much have our condition and continuation of, if we can stay below like this area, we'll end up continuing lower, right? So bias should be shorts. There's a new day opening gap as well over here. Let me just draw it out easier. Here to here, new day opening gap that needs to get filled. And that, okay, new day opening gap that needs to get filled. So let's draw out market open. There is a 30-minute gap right here. 9:30 is going to open in 1 minute. We end up coming up. Now, the way I would see this today is kind of like a Judas swing, because I am very focused when I trade on protect the highs or lows, low resistance highs or lows, and then also power of three. So we see that we have low resistance right here. We see we have high resistance up here because it's a fair value gap, right? When we have a fair value gap, a higher time for fair value gap, and you tap into it and you reject from it, that high now becomes high resistant, right? So we have this low resistance right here. We have now this high resistance right here. We have a 30-minute gap tap. Off market open, you could quite literally just take an entry. Obviously, the entry is too low here, but you can quite literally, if we get any type of retracement towards the 0.5 here, you can take a entry, and here we got a 0.5 tap with this at being the protected high. And as long as you have your stops at the protected high, you could have entered quite literally before we ended up dumping through the inversion. You don't need to see inversion. You do not need to see ICISD. You do not need to see all of these things. Those are just concepts to make it clear to you visually, but protect the highs are the most important thing. So we have a gap right here, right? 1 minute gap. We have a 30-minute gap. We tap into it. This becomes the protected high. We expect price not to go above here. So that's where your stop loss would go. No matter where you enter, that's where your stop loss would go. So if you enter somewhere here before the dumpage, okay, if you enter down here, chasing it, I'm sorry, but if you're chasing it like this, your stop loss has to be up here, or else you're probably going to get stopped out. Now, I don't think this is a good entry. I think if this is the trade you're taking, you should probably just not take the trade in the first place. So that's why you would probably wait for some type of 50% of this range before end up taking the trade. So this was the trade idea, and you could have taken it all the way towards these lows, and as you can see, it would have played out perfectly. Now, is this a beautiful trade, a beautiful delivery? No, it's not. But what thing is beautiful is the fact that we have a protected high above our stop loss. Now, I really want you to focus on protected highs. Whenever I take a trade, I'm going to put my stop loss where price is most likely not going to go before my take profit, right? We have low resistant targets, right? This is the new day opening gap, new week opening gap. That is a low resistant target, especially when we have low resistant liquidity built up towards it. And then we have a high resistant stop loss, meaning if we deliver here, deliver down here, we should deliver here before delivering here. Okay, that's the game of probabilities in trading. So there's that trade, right? Then we're gonna let time play out, and we are going to see that price starts chopping out for the whole session. So when price is chopping around for the whole session like this, especially when we have a high resistant high, and then this becomes a high resistant low, we need to be creating liquidity or creating low resistance. So for the next like 30 minutes to an hour, you can see that chart is just creating low resistant liquidity for then end up creating the next move. So what is the next move of the day? It's at 11 o'clock. A lot of people don't end up taking trades at 11 o'clock. They end up actually getting it off the charts before it. But if we build so much low resistance, which we did over here, 11 o'clock is probably going to distribute. So I would recommend, as someone who's trying to go from a beginner to an intermediate to a little bit better of a trader, you should probably stay on the charts until your final TP is taken. Because I think you could paper trade it. You don't have to take it on your main accounts, but just being on the charts, not I'm saying every single day, like not every single time during Asia session, not every single time during London session, not every single time during New York, but until your targets are getting hit, I think it's a good idea to, stay there and sit there and realize what the fuck is going on with the charts. So we end up sweeping like 3 times this new day opening gap, sorry, and we end up creating low resistance liquidity. And 10 a.m. opens up, meaning the 4-hour candle, and so the 4-hour candle opens up right here, and we didn't create a top wick. So what ends up happening here is that when the 4-hour candle opens up, there's also a 1-hour gap. So now this high right here becomes no longer low resistance, because we have low resistant liquidity built up towards the 1-hour high, which also creates a gap. So it becomes like this now. So now this high is not protected, meaning if we come up here and reject, we are going to end up seeing lower prices. But if we don't, we're going to end up pumping higher. But because we have this low resistance liquidity, you can kind of assume that we are going to continue lower, which is also a continuation down to these lows as well, like these lows as well. So now today, this day over here, we end up coming up, tapping the 1-hour, end up sweeping. We end up sweeping this high inside the 1-hour, and we end up getting some type of rejection. Now, a way you could have taken a trade here based on discretion, and there's literally zero entry model, no mechanical model for this, is once you see that we end up coming up, sweeping this fair value gap and creating this 5-minute rejection block, okay, this 5-minute rejection block, and then you also see that the 1 minute, not the 1 minute, the 11 a.m., which is the 1-hour candle, didn't really create a full bottom wick. You can quite literally just wait for some type of 5-minute manipulation or 15-minute manipulation into this rejection block, preferably 5-minute, because 15-minute, it's not really aligned with the rejection block here. So wait until it taps the midpoint. Once it taps the midpoint, you could either just enter like that, or you can just wait until you see some type of distribution or like a higher time frame move occurring. So here you would wait until the 11:30 candle opens up. And then the 11:30 candle opens up right here. We create this bottom wick. We create that. And then from here, you could probably just do this right here like this. And then your targets would be the full low resistance liquidity run all the way down here. And will this play out without stopping this out? Obviously, this is hindsight. So obviously, I know that this ends up playing out. And it ends up going on for pretty much the whole day, because at the end of the day, the bias was that we were not going to go higher than here. This was going to be high day. So if you could literally just hold this trade until your targets are hit. So your target could be this low right here as a conservative target, or you can hold all the way down until later in the session and take profit there. But I would say where I put the take profit here is a conservative target for the day. So you could have taken 2 banger trades based on discretion today. And the reason why this is, like, even though it looks disgusting, is still pretty high probability, is because, again, the high is high resistant. You don't need a perfect entry model to enter this trade. You could have even entered off this rejection block, or you could have just like waited even longer and entered off of like this pullback, whatever. As long as you understand that this is your stop loss up here, because this is 100% protected, that's how you take high probable trades. Now, I'm not telling you to go out and just slam top ticking trades thinking that you've already seen high resistance and low resistance. I'm saying every time you go through a day or every time you enter a trade, think to yourself, is my stop loss higher resistant than my take profit? In this case, because the bias is going to be shorts, and because we already came up on the 4-hour to create the 4-hour top wick, okay, this is the formation of the 4-hour top wick. Once we like start breaking down and we understand this high is going to be high resistance, this is going to be the 4-hour high, meaning we are not going to see price go back up here for 4 hours. Okay, for 4 hours, we're not going to see price going up here. So you can quite literally hold this trade until 2 p.m. Yeah, you literally see it right here. You can hold this trade until 2 p.m. and pretty much bottom ticket, because it is based on like the high resistance is based on time. As you saw here, this is going to be a 4-hour top wick. Okay, so this is going to last for 4 hours. Okay, at least 4 or 8 hours until until the next candle opens or the next candle after that, right? And then this one was a 30-minute high. So that lasted for how long? That lasted for 30 minutes until we ended up coming lower and then going higher, okay? So you need to understand that every candle on a higher time frame has a top wick and a bottom wick and a power of 3, and I'll talk more about it. And every trade I take is based on this ideology, where if we want to create a high resistant high, it has to be a higher time frame, not a 1 minute, but a higher time frame wick, high or low. So, and then based on that, you have a certain time you can hold a trade for. And depends on like the delivery, of course. Like if it starts chopping around for 50 minutes, like let's say this trade, let's say this, what you think this was going to be the trade to send us lower. The second you let's say the second you see some rejection here and we start chopping around, you quite literally understand that it's going to have a resweep because it's not distributing lower and there's no low resistance liquidity buildup. So we build the liquidity, we have some rejection here, and we take shorts to the downside. You bag the fuck out. Now, did I take these trades? I'm going to be completely honest with you. I took this one on evals. I did not take this one. Okay, I got off the charts by then. And honestly, I don't even know if I would have taken this because it looks really choppy. And in the moment when you see choppy like this, it kind of hurts. But if you really take your time to, go on the higher time frames and take away the 1 minute chop, because the 1 minute's low key just noise if you really think about it. If you take away the 1 minute chop and you really just go to the 5 or 15 minute and the 1 hour candles, you can quite literally tell that this is going to be the high, okay, of the 4 hours. So those were two great trades. We're going to go on to the next day, and then I'm going to end the video. Hopefully you guys took something out of this. Now, if you do have any questions, comment down below. If you have any more questions, go to the Discord. If you have any more questions, DM me on Instagram. Let's get into the next day. Okay, so following the weekly profile, we swept these weekly highs, we dumped off, right? And then the next day we opened up and we had a dump during Asia session, meaning probably going to be lower probability conditions unless we start generating liquidity early on in the session. And then later into the session, we might have some type of move. That's how it is. I'm sorry if you want to take trades at 9:30, exactly at 9:30, maybe you won't catch a trade because of the fact that we don't have like liquidity buildup yet, because we just jumped 466 points on the day before New York even opens up. So with the weekly buys, okay, I like to start from the weekly all the time because it just makes sense. Like if we can understand where the weekly is going to go, we can understand where the daily wants to go, and if we understand where the daily goes, we need to understand where the 4 hour goes, and then from the 4 hour we work down, we work down, and we work down, and we work down until we get a very precise entry. Okay, so that's the point of day trading. And so here we have this inversion on the daily that's probably going to play out. We also have the sweep here, so we know this is a protected high, meaning we're not going to come back up. We ended up having a harsh dump, and if you look at the lower time frames, look at the 15-minute time frame, you see that we don't create any LRL, right? We just kind of come through this gap, we inverse it, we slice through it, and we don't really create like low resistance liquidity. So we look to our left to see some targets. So where's low resistance liquidity? Okay, there's some here, not really. It's not really that much built up yet. So, and plus that doesn't align with our bias to the upside. This is the buildup right here. So we have this buildup. This is our final target for the day, for today or for tomorrow. Whether it's going to hit, we don't know. But this is the full buildup of low resistance liquidity right here. It also aligns with the final target for the week, or for the week, or this week or next week, right? And yeah, we have our targets. So do we want to take longs on this day? Probably not. Longs are probably not going to play out, right? Because we don't have any structure to the upside. We have massive gaps, and we don't have any any like low resistance liquidity, which looks like this, right? This is low resistance liquidity. We want to see this whenever we are taking longs or shorts, which is basically what this looks like, right? The choppiness, the up and down, the higher lows, the higher highs, and stuff like that, right? So we come down. Here, let me skip to market open. Okay, so this was a very discretionary day, and I think people can benefit from understanding why some of this trades worked. So we know that on the 1 hour chart, we tapped in right here to the 1 hour gap, okay, at 8 a.m., which is unfortunately not during New York session. So it's like, I don't trade if it's not during New York session. So I wouldn't be able to take a trade here, right? So we end up going through, and then New York AM ends up opening. We end up creating this New York AM wick down here, 9:30 wick. We end up resweeping it, coming back higher, and then we try to make a little move to the upside. The problem is, right, if we were zoomed in, which actually I remember this day, I actually took trades on an eval. I took something like this to try to catch passing the eval or something, and I ended up passing the eval. But on the higher time frame, if I was zoomed out, I could have caught a banger. Why could I caught a banger? Because we end up coming up and tapping into, what do we tap into? We tap into a 1 hour rejection block. Why is this rejection block valid? Because this 1 hour candle, this high right here, is high resistant. Okay, this 1 hour candle is high resistant because it tapped into a 1 hour gap. Okay, it taps into a 1 hour gap and it rejects, closes bearish. Then we come up again. We tap into the CE. We tap into the consequent encroachment of the. We tap into the consequential encroachment. Okay, the CE of this rejection block, and then we actually reject. So because we actually reject, right? We can't just close our eyes and limit order this, right? Like, it's just stupid in my opinion to just limit order. we want to assume that this high is going to be protected, and the only way that assumption becomes valid is if we get a rejection from that point of interest. So anywhere in this rejection block, if we see any type of rejection, we can take a trade. Okay, so we can take a trade. So you could have taken it off the 930 off this you could have taken off the 931 right here off this rejection down to these lows. It's not that good. Why? Because there's no like buildup. There's no buildup of low resistance. So we want to see price move around, okay, chop around after, and then decide. So let's say you did take this trade, right? You would have taken it. First of all, a close down here if you're taking inversions, and a stop up here is just not worth it. If you would have pre-fired it, that's chill. I don't mind that. If you would have pre-fired it and then took profits here because, you know, like that's just how it is, that's fine. But that's not how I would trade, because I want to catch the higher time frame move. I don't want to catch this little micro up and down bullshit. So because we tap into the CE of the rejection block, and then we get some type of like actual rejection from the rejection block, buzzwords, and we get an inversion right here. You could take it from the inversion. You could take it from literally just the fact that it closed bearish right here, and understand that this is going to be, so we'll put the inversion entry, understand that this is going to be the protected high now. So this was protected high, then we get the rejection block, tap into the CE, the rejected block, actually get rejection. So now we assume that this is going to be a protected high. So that's where our stop loss goes. Whereas the low resistance draws aligned with the daily expansion and the weekly move is all of this right here, right? We're not going to come down and tap into these. Like we're not going to sweep half of the low resistance liquidity and then just decide to rip up to the fucking upside. Like it's not going to happen, right? So the second we see this type of rejection right here, we want to, you know, take a short. So what also helps right here as well is the fact that it also lines up with the 5-minute candle open. So if I mark out the 5-minute candle open, we can see that we don't end up creating a bottom wick. Okay, we don't end up creating a bottom wick. If we are really truly bearish, this is a good sign. Why? Because we want to end up having our stop loss in the top wick of the 5-minute. As you can see right here, if I go on the 5-minute, this is the top wick, right? And we want to enter before the body candle flips to the direction you want to be in. So we don't end up having that manipulation to the downside for the wick. So we come up 5-minute PO3, okay, 5-minute PO3, and then we end up coming all the way down. And then if you just target, your full take profit would be down here. And you can see that it ends up playing out after a very long period of time. Now, do I want you to hold all the way to this take profit? If you are a very experienced trader, this is a good idea, especially if you have no consistency funded accounts or you trade a live account. This is a good idea, right? I think this is a pretty solid trade to end up taking. But if you're not an experienced trader, you could just end up holding all the way down to these lows right here, or you can end up holding until 10 a.m. opens and then manipulate slower. So 10 a.m. open would be right here. 10 a.m. open would be right here, right? If 10 a.m. opens, it has to create a stop wick. So the second 10 a.m. comes up right here and creates a stop wick and then ends up manipulating lower, you can end up just closing the trade. It's like this. So you can get a 1 to 5 or a 1 to 4, or you can just hold for a 1 to 7.5. So this is a high risk reward trade. If you're someone who closed this trade for 1 to 1, you're not getting better. Why? Because you're not actually holding for the full move. And so I just wanted to make this video to basically just talk about how like I use discretion with like some type of higher time frame narrative in order to take a few trades. Now, again, this is all hindsight, meaning I didn't take most of these trades, but in the future, if I see trades like this is the type of trades I take. And yeah, this is a trade I would have taken on my live account. I didn't end up doing it. I was not like I missed it, whatever, it doesn't matter. But yeah, so if you guys do enjoy this type of video, I'll be going over like every single day. There's like a week, every single day there's trades that I miss or I get and I think are pretty good. I'm gonna be going over the trades, especially going over from a straight discretion point of view. I didn't tell you a single strategy here. I just basically was saying where your stop loss has to be high resistance, where your take profit has to be low resistance, and that's it. So if you guys have any questions about this, I've been trying to record this video for like 15 times. I keep stuttering, I keep messing up. I don't know if my words are clear, but I think this is the best possible version I have of it. So I'm gonna be posting this one. If you have any questions, DM me on Instagram, join my Discord. I'll answer questions there. And then also, last but not least, the comment section down below if you don't want to do any of that. So with that being said, please like, comment, subscribe, follow me on all socials. And I'll see you in the next one. I'm gonna keep making videos like this. I'm gonna spam videos like this for y'all. So it's not the end of the teachings, right? Like it's not the end of the world. And yeah, see you.